Hi, everyone. Nice to see you all again. Today, we're going to have another webinar and talking about very interesting topic, money. I hope you guys like it. We are going to be talking about some important issues that people that are moving to Portugal they should be aware. And today we're going to have Sarah talking about currency exchange and transferring of money overall, and also Pedro talking about Texas in Portugal. Very excited. How are you guys? How are you guys doing?
All good, thank you.
Very well,
Excited
thank you.
also.
It's good to know. We're gonna be waiting for about like 5 minutes until everybody can join the section. And if you can let us know, guys, where you're based in this moment in the comment section, that would be amazing. I already can see some familiar names over here. We have Stephen, our dear friend Carlos, who's been in touch for so long. Uh, Debran, you mentioned that there is an issue with your screen. Maybe you can try to rejoin this section. Maybe that can work. Okay, we have Darren. Hey, Darren, nice to see you here. Kent, Glenn from Portimão. Good people from the Algarve. We were just talking about the weather here in Portugal. It is quite cold up here in Porto. It's let me see how cold is it. Guess it's about 12 degrees. It is for me. That's freezing temperature. Yeah. But Sarah, you're used to
Yes,
the
it's seven.
temperature
Yeah,
in the UK for you. Like
it's
not
17
not that
here
cold, I
in
guess.
Lisbon. Yeah, 17 in Lisbon. But like you're saying,
7.
because we're so used to the warm weather here, as soon as it drops, it's like, oh, it feels really cold. But then when I speak to my family,
Yeah.
it's a lot worse. So
Exactly. Oh, good. So we have Kimberly from Braga, where I used to live. Nice. Setúbal. So people also in America. So we have Kirk from Colorado. Um, also have Sal, New Hampshire. Yeah, Kimberly from Braga as well. Braga is being represented here in this chat. So we have Gregory also in America, in Washington D.C. Even from Viana do Castelo, Loretta. Yeah, I mean, it's a beautiful place there. I guess it's pretty cold in Viana do Castelo. It used to be very cold up there. And so Valerie from California, Stephen from California. Oh, good to know. Juliet from Florida. So I guess we have people both in America and here in Portugal. Reg Brooks, Hawaii. Oh yeah, people from everywhere. Good to know. And I know it's not easy to manage also time zones. So thank you for being here in this webinar. We'll try to make the most of it for you guys. We've been covering this topic for a while, and usually when we advertise uh, finances, taxes, those are some topics that people are really willing to get good information, because there's we can find not so trustworthy information online. So we try to share with you the what's truth about those topics. And I guess I'm gonna start. People are joining little by little. So first of all, welcome everyone. As mentioned, today we are gonna be talking about um, finance. So many of you guys are either planning to move to Portugal or are already here, and we know that it's when we deal with money transferring and taxes, we are always trying to find the most efficient scheme so we can save as much money as we can. And that's what we are going to be covering today. We have Sarah, who will be covering the money exchange and money transferring to Portugal. As you may know, during the process of relocating to Portugal, you will need to transfer money to Portugal, either to rent or buy a property. But not only that, I mean, you when you start living here, most of you guys will still need to bring money to Portugal. So having a good strategy on doing those money transferring can help you save lots and lots of money, as Sarah will mention. And also, very important is the tax side, because if you decide to move to Portugal for good, you will probably become a Portuguese tax resident, and that means you will start having to pay tax here in Portugal. And Pedro will be able to guide you on how to be efficient when talking about taxes here in Portugal. And we have a lot to cover. So, without no further ado, I'll pass the mic to Sarah to talk about currency exchange here in Portugal. It's on you, Sarah.
Oh, great. Thank you. Well, hola, boa noite, everybody. My name is Sarah and I work for Spartan FX. I'm from the UK, but I live between Cascais and Lisbon. I've been here nearly 18 months. So I don't have a full grasp of the Portuguese language just yet, but it is something that I really want to do. But we are very fortunate that essentially we don't need to learn the language to live here. That's one of the main benefits. Day to day, and even sort of going to the doctors, things like that, it is fine. Obviously now we have good technology, but like Google Translate, so you can get by. Don't worry about that in the slightest. Obviously more rural areas, the older people speak a little bit less, but everybody really tries, and often they understand you more than they can say. But everybody's super friendly here. So if you do have any questions about moving to Portugal, and as far as what's it like living here or anything about my journey, I'm happy to share that with you. Please, obviously, do get in touch that way. But ultimately, I'm here to talk about the money side of things. Really, I just want you to take away something to start thinking about in the early days. Often people leave it to last minute. Purely that's because you've got, I know, so much other things to consider, getting your visa, selling a home, moving country. I know it is stressful. And this is one of the things that gets sort of left behind, as far as someone tells you, you need to pay these fees, you need to pay for this rent, you need to buy this property, you've got this deadline. And usually it's, I need to make a payment next week, or I need to make a payment this week. But what I want you to do is start thinking about this in advance, because there's a few things you can do to make it easier. One, about managing exchange rate fluctuations, managing your budgets, and then also from a process perspective, what do I need to do before I leave America? If you are already here, there's still things that obviously can be discussed about, making maybe larger transfers easier. So I'm going to try and see if I can share my slides. Okay. Not sure. Anything. Here we go. Perfect. Okay, so as I said, I've already introduced myself. Okay, I'd like to sort of break it down just to make it easier. I've touched on a few of these things just a moment ago. The main things to consider are, first of all, the price about when you're moving your money. So really that's on the day when you're comparing against your bank, about an online provider or ourselves, what price am I being offered? What the other thing to bear in mind with your bank is sometimes we've had clients say they're going to do free transfers for us. Yes, they may not charge a bank transfer fee, but they'll still be charging you within the exchange rate. So it's not for free. And that's where you can really see a difference. It depends on the bank that you bank with. We've seen anywhere between 3 and 4% difference. I've had a client that I spoke to who'd moved here, he'd used Bank of America, and they were about they charged them about 6%. So really, they're still charging you, even if they say they're doing it for free. What they mean is maybe a free bank transfer, but it is within the rate. So it's always checking around. Also, when you are comparing prices, it has to be like for like, because the exchange rates are moving all the time. So if you get a quote today and you come and speak to us next week, the rate will have moved. So the price that we give, it won't be a match, or it certainly won't be a direct comparison to what you're being offered by your bank or another provider. So that's just one aspect. And yes, you can save money within that, as in comparing prices. The other side is the exchange rate movement, and that's something I know that's become more topical at the moment, because we have seen greater movement, certainly for selling US dollars and buying euros. The rates moved around about 13, 14% since the beginning of the year. So just to put that into monetary terms, if you're buying a property of 450,000 US dollars, the difference is nearly 60,000 US dollars. So this is something that needs to be considered, especially when you're budgeting and your move to Portugal. The other side is the compliance and sort of the process side of things around, who do I bank with? Do they do international payments? We had a client who has money in a Fidelity account, but they won't make transfers to third parties. So they have to transfer it into a different type of Fidelity account, which they need to set up, which takes time. Once they transfer it into that account, then they can make a transfer out of the country to another account. So again, it's timing of that sort of thing as well, because if you think, right, I need to make a payment next week, if you've got your money somewhere that won't do that to a third party or sending it internationally, then you have to do something else, which might take time. Some brokerage accounts take a few days to release those funds. It's timing really of kind of factoring those sort of things in. Some banks have limits on what you can do. Again, it's all about the research before you leave to just really understand what you need to do to make the process easier. So we'll get into that towards the end. So I just wanted to talk a little bit about exchange rates. Depends on your time frame, and if you're watching this back in a few months' time, the exchange rates move all the time. So the information perhaps I give right now on the exchange rate might be redundant in 6 months' time. But it's just to give you sort of an understanding of what we're looking at, what the markets are looking at. People ask me if there's any seasonality to it. There isn't. It really is around, we look at the data releases. So, for example, inflation data, job data, how economies are performing. It's that sort of data that we're looking at. Then there's sentiment. So, for example, which is probably, you'll know it now, but I'm on here, so I can't check. But we've got the interest rate announcement coming out from the US. But what will be interesting is, yes, what they do. I think it's forecast they'll cut it by 25 basis points, but it's more around what Powell will say afterwards, which will give the market an indication of what he's going to do in December and maybe what they're going to look to do next year. The other thing as well is, as I mentioned, economic performance. Again, it's to do with the different countries. So what's the economic performance in the US compared to the Eurozone? So, for example, in the Eurozone, they have lower debt levels and a slightly more stable fiscal policy. So that's sort of keeping the euro a little bit more stronger than the US dollar to a certain degree. With the US dollar, again, we're looking at economic performance. And these are the sort of things that the markets are bearing in mind. The US dollar traditionally is what they call a safe haven currency. So what that means, if there's any global unrest or any sort of issues, then the markets will buy US dollars as a safe haven, as a sort of security. So that does actually help the US dollar a little bit. The other things which obviously we have no idea when it's going to happen. What's going to happen is obviously pandemics, wars, natural disasters, which obviously we've seen in the last 5 years, where we've seen the greater rate movements. So yes, there's forecasting that markets do. We look at historic trends, but ultimately no one really has a crystal ball and knows exactly what's going to happen, because, as I said, there's other things, that sort of curveballs that are presented to us. So it's just about sort of really more bearing it in mind and trying to sort of monitor it and look at your budgets and how we can help manage those going forward. How I really explain it to people is, from a money management perspective, you have your financial advisors, you have your wealth managers, they're managing your money. This isn't really any different, because exchange rate movements can really make a difference. So, if you're making high, good interest in an account, but then you come to move your money at the wrong time, you could have wiped out some gains. So use this alongside sort of a strategy for moving your money alongside financial advisors. In fact, see, with your permission and the GDPR, but we work alongside with a lot of clients' financial advisors or buyers agents to just manage the transfers and make sure that we're trying to get you the most euros that we can. So I just wanted to sort of put some graphs there, just again to put it a bit more visual, to sort of give a bit of an understanding. The other thing to bear in mind as well is, I always like to look sort of historically as well, not just in 1 week or 1 month, because it doesn't really tell the full story. Because yes, the rates have deteriorated, but we're really back to sort of the levels we saw back in 2021. What we're looking at really for clients at the moment is, we've been at these levels for a number of months. There's 2 things to bear in mind. One is that when we see slight spikes, that's where clients are taking advantage. So if we see a movement about 1 or 2%, we're seeing clients buying some euros just to try and take advantage of that. As I said, no one's got a crystal ball, but the other side is, what happens if these rates are actually good and next year we see more deterioration in the US dollar? At the moment, obviously, we've seen sort of back and forth of tariffs between countries. Trump will announce a tariff, another country will then retaliate, and then that's where we're seeing a lot of volatility at the moment. It's looking a little bit more positive. Trump's in Asia at the moment, he's signing some trade deals, but ultimately, if there are extra tariffs on goods and services, what will that look like in the future? And as far as who will bear the cost, it will filter down to consumers. Will consumers buy less? Will the jobs be lost? So it's interesting to see how that plays out really next year. I know that a lot of our clients are quite concerned. The other thing as well is, we're looking obviously at the interest rate announcements. We may see them look to cut interest rates. I think Morgan Stanley are predicting 4 interest rate cuts next year, and they think that the euro-US dollar rate could go to 1.25. So obviously, if that happens, right now your levels are looking good. So it's things like that to sort of bear in mind. Trump does want a weak dollar, because if there's a weak dollar, it will help exports, it will help stimulate the economy, and it will be cheaper to pay back debt as well. So those are the sort of things to bear in mind in your long term. Am I moving in the next 6 to 12 months? What strategies can I put in place, and looking at the rate? Some of our clients are looking at, I'll get into it in a minute, about buying currency in advance now, maybe a third of what they're looking to do. Worst case, if the rates do improve next year, you can buy the remainder, and then the average, it will still average out at a good average for you. So again, it's about sort of looking at what money you've got available, what are your time frames, and at the moment we're just watching out for any improvements that we can see in the rate. I just wanted to put the inverse in case you're looking at it that way, US dollar euro, so that you can see where we've been at and where we are at the moment. Okay. The other thing is if you give yourself more time, you have more options. So you can buy currency as and when you need it. If you've got a third party to pay, so if you're buying a property and you're paying a lawyer or a solicitor, or you're paying direct to the seller, you're paying lawyers' fees, you're paying direct to the account, you can pay it as and when you need it. You can buy currency in advance. So if you have a Portuguese bank account, so you can put the money there. If you don't have a Portuguese bank account, you can still buy the euros in advance. We can hold euros free of charge. All the money is protected. So if anything should happen to this company, you get all of your money back. So even if we held over $1 million, all of your money would be protected. But it's a way of you being able to buy euros in advance. As I said, some clients are buying a quarter or half of what they need to do, or a third, and then they're buying, as you go, as we see these sort of spikes. The other option that you have is what we call a forward contract, which allows you to buy currency in advance, lock a rate today for a future payment, but you only need 10% to do that, 10% of the amount that you need to lock in. It's not a cost or a charge, 10%, but it locks the rate today, for example, for a future payment. So especially if you're buying a property, completion is in 12 weeks or longer, you can lock the rate today for that future payment, or for something that you're doing next year. As I said, some clients are locking the rate for 6 to 12 months' time. Now that can be for, as I said, buying property, or just any amounts that you want to do, or if you're doing regular payments like a pension, we can secure that rate for those payments over the next 12 months. Now, a couple of benefits there is, because we only need 10%, it means if you're waiting maybe for a house sale to go through, but you've got 10% available, you can lock a rate. It also means that 90% of that can be still held in a higher interest earning account. So the benefit then is you can maybe lock the rate in protecting the price, but also you're still earning interest in your high interest earning account. Because that's the only thing, when we hold money in our account, it doesn't earn any interest. It's in your name, protected, but it's not an interest bearing account. So it's just giving you a few more options. Ultimately, really, it's to secure the rate to help you budget. So you know now how much it's going to cost you, especially with property. If you're buying in America, for example, yes, you'll have extra cost of a lawyer or a survey. But when you say to them, how much is this property going to cost me? They'll tell you it's X amount in US dollars, and that's how much it's going to cost. Whereas obviously you're paying in euros, you've got to convert your US dollars. They're going to say, well, actually, we can't tell you how much it's going to cost you. It depends what the exchange rate is on completion. So you might find, great, it's cheaper, or you might find it's more expensive by a few thousand. So again, really it depends on your situation, what money you've got available, risk appetite, time frames. We sort of put all that together and decide sort of what options give you guidance to see what options are the best for you. But it's just giving you extra options that you might not have thought are available. The other thing we can do is just track a rate, so we can monitor the market for you. If it goes above a certain level and you think, right, it's more favorable, great, there's a spike in the market, I want you to buy some euros for me. Or we also look at, on the alternative, is when it starts to dip below a certain rate, you want to buy because you don't want it to become more expensive. So I think the thing to bear in mind with moving, although it's very difficult, again, whenever you budget for anything, holiday, everything ends up being more expensive. But have in your mind, what's the worst rate it could be for you to make this not as affordable, and see if we can kind of work between those levels and make sure that if it starts to creep towards that, we maybe look to buy some euros for you. So again, it's just getting you to start thinking about this and how this could affect you from an exchange rate perspective. And that's, as I said, you can leave it to the last minute and buy when you need it. But again, as I said, if you're thinking about it in advance, then you've always got more options if you need them. So this was just to put a forward contract into sort of euros and US dollars, just at a monetary. Obviously, hindsight is a wonderful thing, and if we'd known that, then obviously we would save money. But it's just, again, to sort of visually show the comparison that I sort of mentioned earlier about if a client buys a property, pays a deposit, maybe early February, they're going to be buying at a rate of 1.0211. Then completion 12 weeks later, the exchange rate changes, it's more expensive. And this is the total cost, 560,950. What you can do is you can actually lock the rate, as I said, when you come to pay the deposit for that 12 weeks time. So the savings would have been about 50,000. So again, it's just sort of giving you more options. It's difficult because obviously you are locked into the exchange rate. So if the rate does move in your favor, you are locked into it. We see it more really as a budgeting tool. I had a client a couple of years ago now who was buying a property, and the seller put the price up. It was slightly above, it was above his budget. So he went away, really wanted the property, came back and was like, right, I've managed to get some extra money. I definitely want to buy this property. And he did a forward contract and locked the rate, because he said, as much as obviously it would be frustrating if the rate moved in my favor and I'm locked into this, the reality is I can't physically afford for that property to cost me any more money. I'm already slightly above the budget that I put in place. So again, that's where I'd say it's all around your situation, and this might not be right for everybody, but it is right for some people. So again, it's just giving you more options that you might not have thought about. The other side is the process and the compliance and things like that. You know, you see it all the time. The anti-money laundering, the rules and regulations are getting tighter. I think especially after COVID, where more and more people were using online because they couldn't get into their branches. So more questions, more authorizations needed. And that's where it can take time, or payments can be flagged or held up. So especially on the larger sums, or after you do a certain number of payments, then amounts will be checked. And really it's just a case of providing documents around, what is my reason for transfer and how did I acquire the money, really, which makes sense. It's just to show that you're not basically money laundering. The bank might flag payments, the beneficiary bank. And what normally happens is the beneficiary bank then talks to the originating bank. So if you did it through your bank in America, it would talk to that bank. You can imagine that's quite a slow conversation, and normally they ask for some more information. So we're just trying to make that process as easy as possible. We always collect the documents up front so that we make sure we have everything we need. In case we're asked those questions by the bank, we're ready to provide them, to just help not delay the payments. We've got extra tracking so that we can tell you when the money's in your account or in a third party's account. The other thing I'd consider as well is send a test payment. If you're sending larger sums of money, it's always better to lose 100 euros than 100,000 euros, especially if you've never paid to them before. So I'd always recommend that. We always check the beneficiary account, so I'd always recommend that you do that if you're not using us. There's human error, there's fraud, emails can get intercepted, IBANs can get changed. If you're putting in an IBAN yourself, as long as the IBAN is correct, that money will go. So again, we always recommend ringing the beneficiary, which is what we do, checking to make sure over the phone that those details are correct. So then it just makes it easier, because what happens now is if the bank says to you, are you sure you want to make this payment? You say, yes, I'm definitely sure. They check it again. Are you definitely sure you want to make the payment? Yes, I am. And then that payment goes. And then it's more difficult to get the money back if those bank account details are incorrect. So definitely worthwhile. We ring the beneficiary, make sure you're doing that, and sending a small test payment. As I said, it's just sort of those extra checks that I would always do, especially on the larger sums. So lastly, really just check what you need to do before you leave. A lot of clients, sometimes they've done small payments, they've done payments while they've been in America, it's all gone fine. They come to Portugal, and then all of a sudden they've come to buy a property. Now they're sending a larger sum of money. Now the bank's asking for more authorization. You have to fill this form, you have to come in branch to do this. So it's just checking what do you need to put in place before you move. We've had clients which you have to fly back sometimes. Some banks have limits on how much you can transfer each day, especially on online banking. Some banks have a limit on how much you can do every month. We had a client who was buying a property and their bank would only let her move 70,000 US dollars every 30 days. So again, you're leaving something to the last minute and you're paying for property next week. That's not going to be physically possible. So again, it's just asking the questions: who do you bank with? What are the processes that they have in place? And what can you do before you leave? It may be a case of you're already here, which is fine. But again, there may be things you can do, but you'd always need a little bit of time to sort those things out. And then it's just less stressful if you do this sort of research. Ultimately, what Victor said at the beginning, we need a lot of people that are here. And generally, which is another reason why we wanted to do this, is a lot of clients always say, I'm here, it's great, but I wish I'd done more research on moving money and taxes. So, you can never do enough research, I think. Anything to make moving as easy as possible. Again, I don't know what everyone's situation is, your time frames. This might be really early stages for you. We have a moving money guide, which you can use the QR code or my email address, or I speak to afterwards, and we can send a copy of that and you can have a read through, or reach out and get in touch and just speak to the friendly team. It's completely free to have a chat with us. Just have that conversation, and maybe even if it's just a case of who you bank with and what that situation looks like. And as I said, I've moved here myself. I can't recommend it enough. Absolutely love living in Portugal. It was the best decision I ever made. Obviously, we were talking about the weather not being so great, but generally the weather is lovely. It's very safe. I feel very safe here. And everybody is very welcoming. And there's lots of Portuguese and other expats that everybody's willing to help everybody, and you'll have a support network. So don't worry. Thank you.
Thank you so much, Sarah. Really appreciated the very good content you shared here. And just a side note here, we I mean, we have clients that it sometimes takes more time than expected dealing with banks here, because one part of the process of moving to Portugal is to set up a bank account. And sometimes people need to transfer money as soon as possible, either to, I don't know, to rent a property or to buy a property. And if they don't have a local bank account, that can be an issue. And this is one of the ways also that Sarah can help you with. Even if you don't have a local bank account set up here in Portugal, using Spartan services, you will be able to transfer your money to the anyone who has a Portuguese bank account here. So just so you know, because people don't really understand that how hard can it be to open a Portuguese bank account remotely. It seems it's kind of silly, it's just a bank account, but there are so many good things about Portugal. Sarah was talking about how safe it is, how people are welcoming, but one thing that Portugal's um, lack is sometimes efficiency, and there's a lot of bureaucracy, unfortunately, involved in the process. So this is also one way that you can move money quickly to Portugal. Thank you so much, Sarah. Really appreciate it. And now to complement the information and talking about the tax part of the journey, I'm gonna share the screen with my dear friend Pedro.
Thank you.
There you are.
Let
Um,
let me just see how I can share my screen. Okay, I'm clicking present. All right. Okay, I'm with full control. All right, guys. So, in first place, good afternoon, everyone, or I guess that it is a good morning for most of you. at least for the person that is watching us from Hawaii. So I mean, it is always a good morning for someone. Well, so and before you pack your bags, let's talk about Portuguese taxes. And my idea today is to share with you a few insights of what actually means to become a Portuguese tax resident. Okay, because as exciting as it is to plan a move to a different country and to have that perspective of embracing a new lifestyle, there's always that one topic that quietly follows you, which is taxation. Okay, and that's particularly true and relevant when it comes to Portugal, because well, Portugal is a country that's on that, and that's Portugal is a country that it is easy to fall in love with, of course, but there's one thing that also comes with that, which is a totally different tax environment than the one that you are used to in the US. Okay, so I guess that it is a hot topic, an important topic, and let's just move forward and dive into this more complex discussion. But apologies, and before before diving into this more complex discussion, just a brief introduction about myself. My name is Pedro Mota. I am a principal tax associate and the head of the private clients practice at CCSL Advogados, a Lisbon-based law firm. And the focus of my practice is basically assist individuals from many jurisdictions, and most of them from the US, with relocation processes and also understanding the tax implications of becoming a tax resident. Okay, so let's move forward. Okay, so the agenda for today. In first place, I'm going to speak about the general features of the Portuguese tax system. Okay. Secondly, the tax benefits for incoming tax residents. Thirdly, other interesting features offered by the Portuguese tax system and that are applicable to everyone that it is a tax resident of Portugal. And lastly, to conclude, suggestions or things that we understand that you should look out for in case you decide to move forward with this relocation plan. All right, so as for the general features, here the key rule is, as soon as you become a Portuguese tax resident, you become subject to taxes on your worldwide income. Okay, so kind of the key sentence here is worldwide income taxation. And of course that a natural question can rise here. So basically, since when someone becomes a Portuguese tax resident? Well, in first place, you have to acquire the right to legally reside in Portugal. You firstly have to go through the immigration process, okay? And only after then, only after you are entitled to legally reside in Portugal, you can move forward with your tax residency registration, okay? After that moment, the Portuguese tax authority will not accept any tax residency registration, okay? But I mean, so as of the moment that the tax authority accepts your tax residency request, you become a Portuguese tax resident and then subject to taxes on your worldwide income. And well, this means that from that moment onwards, you are required to report in Portugal all of your income, irrespective of whether you have already reported and taxed that income outside of Portugal, and even if you don't transfer that income, and even if you don't transfer that income into a Portuguese bank account. Okay, for instance, imagine that you have income that you receive a salary from the US. Of course, that you receive it in dollars into a US bank account. You are subject to taxes in the US. However, considering that Portugal will be the country of your tax residency, you also have to report it in Portugal, and you also have to pay taxes in Portugal, even though you keep it in your US bank account. So key takeaway here, worldwide income taxation. Secondly, so the second question that I think that you may ask is, okay, but how is income taxed in Portugal? Well, we usually say that Portugal has two different frameworks of income taxation. The first one is progressive taxation that applies to salaries, contractor fees, pension income, real estate capital gains, and under certain conditions, short-term capital gains from the sale of financial assets. Of course, that as a progressive system, the more you earn, the higher the rates. And the top income bracket is around 83,000, and the top rate is 48%. I know that it is totally different than the top brackets in the US. And of course, that certain surtaxes can apply, increasing this top rate to 53%. The second framework is flat rate taxation. Applies to investment income, that is interest and dividends, capital gains from the sale of financial assets, and rental income. The standard flat rate is 28%, applicable to investment income and capital gains. For rental income, the flat rate is a little bit lower. It is 25%. And in certain specific situations, reduced flat rates can apply. For instance, in the case of payments from retirement accounts under certain conditions. Okay. So, but I guess that it is an important point that it is worthy and actually crucial to point out, which is, well, in case you relocate to Portugal, you will be US citizens, but also Portuguese tax residents. And I guess that you know that the US tax is based on the citizenship, but Portugal tax is based on the tax residency. And that will lead to the same income will be subject to reporting and taxation in Portugal and also in the US. Well, the good news is Portugal and the US have a tax treaty, and that tax treaty provides for mechanisms to avoid the double taxation. But an important idea to retain here is, in the end, you will end up paying the higher of the two rates, which in most of the cases it is the Portuguese one. A simple example is, imagine that you have a certain income that in the US is taxed at a rate of 20%. In Portugal, the rate is 40%. You pay the 20% to the US, but you will be able to claim a tax credit in Portugal over those 20%. But in the end, you end up paying those extra 20 to Portugal. Okay, I mean that's basically the way. Things are. But an important question that I am often asked is, okay, but in which country should I file first? Well, the answer is it depends. Well, it depends because it depends in which jurisdiction you are entitled to claim the tax credits. In certain cases, it is Portugal. In certain cases, it is the other way around. But in most of the cases, you are able to claim a tax credit in Portugal over the taxes paid in the US. Okay, so that's basically the general rule. But I would strongly suggest you to check for each type of income in which country you will be entitled to claim that tax credit. Well, our third topic here is special tax regimes. So tax benefits for people that become a Portuguese tax resident. Well, I guess that most of you have probably heard and read about the NHR. Well, the NHR was a very popular special tax scheme that was in force until the end of 23, and it was basically replaced by this new IFICI in Portuguese, in English, the ISRI, or commonly called NHR 2.0. Okay, basically, so the benefits are mostly the same. This NHR 2.0 provides for a taxation of Portuguese salaries and Portuguese contractor fees at a flat rate of 20%, a broad exemption on foreign income, except pensions and income from blacklisted jurisdictions, and it lasts for a period of 10 years as of the tax year that the individual becomes a Portuguese tax resident. But there's a difference. So the criteria to be under this special tax scheme is much stricter in the case of NHR 2.0, because you'll have to become a Portuguese tax resident, and that's common to the old NHR. You also must have not been a resident of Portugal in the previous 5 years. But in addition to these two conditions, this new NHR provides that you must have a qualifying employment agreement with a qualifying Portuguese company. That is, a company that operates in a sector deemed as relevant for the Portuguese economy, basically part of a list that was approved by the Portuguese government. So the goal of this new NHR is basically to attract people that will add some value to the Portuguese business sector. So differently from the old NHR, it is no longer a free-for-all region. Well, the third topic is the other interesting features offered by the Portuguese tax system that basically apply to everyone that it is a Portuguese tax resident, irrespective of whether they are under a special tax scheme or not. Okay, so and the first point is Portugal does not have any estate or inheritance tax, which makes planning easier. Okay. Secondly, Portugal does not have a wealth tax, except for Portuguese-based real estate in certain cases. But in practical terms, this means that in case you move to Portugal and become a Portuguese tax resident, and you have assets of great value, for instance, properties outside of Portugal, many large sums in your bank accounts, or even financial investments, Portugal will not charge any tax on these assets. Thirdly, there's no gift tax between close relatives. Okay, so donations between close relatives are not subject to taxes. And lastly, and this might be of interest just for some of you, Portugal has one of the most attractive crypto tax regimes that basically exempts long-term crypto gains. And that means that just short-term crypto gains, so gains from cryptos held for a period less than 12 months are subject to taxes. Well, and lastly, our suggestions, or the things that we understand that you should look out for before you move to Portugal. Firstly, it is the terminology, because I mean, words don't always mean the same in Portugal and in the US. And I guess that the perfect example is the definition of pension income. Okay, because for Portuguese purposes, pension income, the definition of pension income, it is quite broad. It covers social security benefits. It covers social security benefits, but also regular payments from retirement accounts and regular payments from insurance policies. So basically, things that may have a different tax treatment in your country, okay? But basically in Portugal, considering that they are qualified as pension income, they are subject to tax at those progressive rates. And 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 just to recap, the top rate is 40% and applies to income in excess of around 83,000. Okay, so but understanding this difference, it is quite important, because in a specific case of retirement accounts with the right structure, you can classify these payments as investment income instead of pension income, and basically tax them at an effective rate ranging between 20% and 11.2%. Okay, so understanding the differences, understanding the concepts, can actually make a huge impact. All right. So, secondly, integration. So, integration is key because, in first place, it is important to have, or I think crucial to have, a coordination between the Portuguese side and also the US side, in order to create a strategy that works in both countries. Okay. And secondly, integration across expertise, between the tax advisor and also the tax preparer, because at the time of the preparation of the tax return, it is important for the tax preparer to basically be aligned with the advice that was previously that was given, in order to ensure that accurate reporting is done. Okay. And also integration between the tax advisor and also the financial advisor. So in order, because we understand that tax and investment strategies, they must go hand in hand. Okay, basically to avoid surprises. We have a lot of clients that sometimes they make investments and they basically just hear the financial advisor, and we have noticed that sometimes at the time of the submission of the tax return, they basically get surprised, because they weren't expecting that, because they weren't expecting that tax burden. So it is important to have an open channel between the tax advisor and also the financial advisor. Okay, so basically, to wrap up, Portugal is an easy country to fall in love with. There's a lot of sun. The people are nice, but please, I truly advise you to not forget the tax side of the story. Okay, and my main advice here is plan ahead, and before moving forward to any tax registration, please make sure that you understand clearly all of the tax implications of becoming a tax resident, and how your income is going to be taxed as a Portuguese tax resident. So thank you, and feel free to ask me any questions, or in the future to schedule, or in the future to send me an email to schedule a meeting. Okay, thank you very much.
Thank you so much, Pedro. Really appreciate it. Important topics. So money exchange, taxes, everything you need to know to do a very prepared and planned move to Portugal. I did pin in the comment section both Pedro's and Sarah's email address, so you guys feel free to reach out to them directly. We try to cover here more on a broad level those topics, and we know you guys will have very specific topics to talk about, and they will for sure help you individually to answer your questions. We're on time. Guys, if you have any question now, feel free to drop in the comment section. Otherwise, my suggestion is to contact both Sarah and Pedro. and also I want to thank you both, Sarah and Pedro, for having the time to talk about those very interesting topics with the public.
Victor,
We do have one question
yeah,
here
yes.
from Katie.
So, as a Portuguese resident with earned income, or
And yeah, as a Portuguese tax resident
yeah,
with
I
earned
mean,
income,
I think
either
that's more. I think that's more a U.S. question because so I am a tax expert in Portuguese taxes, but not in U.S. taxes, and I think that that question whether you owe if FICA taxes, it is basically something to it is basically something to answer from to have an answer from a U.S. advisor.
and that's why you mentioned, Pedro, it's important to have everyone on the same page, right?
Yeah,
The US advisor and the Portuguese one, so
absolutely.
they can come together to guide you. So we have Ebony from Colorado that is currently working to get the D7 visa, open a Portuguese bank account. Recommendations showing passive income through an SPIA annuity. Um, I guess this one is probably also one that would apply for the US advisor, right, Pedro? So
Well, I'm curious if there. No, I think Victor, this is more kind of a way of proving of proving the passive income for this
yeah, yeah,
for the
true,
D7
true, true.
process. Yeah.
The annuities, and thank you, Pedro. They can be
Yeah, but for
considered passive
yeah, but
incomes,
for
but
Portuguese purposes, it is basically a
it's just
pension. So yeah.
yeah, it's just important to Ebony, to share your the document show the annuity, because there may be some specifics there, but usually yes, annuities, they are considered passive income for the D7 visa.
Okay, so I have a question
Um,
here from
right. Yes.
From Juan Fuentes. Well. In case of public pensions, so basically pensions connected to previous work to the public sector, they are subject to reporting in Portugal, but they are not subject to taxes here. And I guess that they have already answered Rojo.
Then
So, 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 so in case in case by row pension, you are saying that your pension is connected to previous work to the public sector. In that, basically, the pension is subject to reporting, but not but not taxed in Portugal. But differently, in case it is a social security benefit, okay, well, in that case, it is subject to reporting and also taxed. And thank you, Ramon, for your compliments. Well, Christian's question. Well, what's well? Um, basically, in case you earn more than around 83,000 per year, some surtaxes can apply that can increase the top rate to 53%. But I mean, the top rate applies to individuals that have an annual income, in excess of 250,000, 100,000. Well, a question
thank you,
from Sal.
Pedro.
Social Security income, it is qualified as pension income and subject to the progressive rates. but specifically in the case of Social Security pensions, you are entitled to claim in Portugal a credit on the taxes paid in the US.
That's it. Thank you. Thank you, Pedro. Yes, we reached the 1 hour webinar now. Thank you guys for the compliments. We really appreciate it. Again, thank you so much, Pedro. Thank you, Sarah, for the nice presentation.
Thank you very much.
And thank you. Thank you, everyone who was here. I highly encourage you to get in touch with Pedro and Sarah. And in case you need anything, we are here to help. Thank you. Have a nice day, everyone, and stay safe. See you in the
Sorry,
next
quick one,
one.
Victor. They're asking about the slides. Are the slides available offline? Will you be able to send? Can we send them through to them?
Oh yeah, I can see now. Yeah, we can certainly we can we you will receive not only the slides but also the recording of this presentation. You can come directly to me if you need any content related to this presentation, and yes, we are going to be sharing with you. So yeah, now we have even more questions. Good. So let's cover them up. So
The question from Sal.
yeah.
Well, your accounts. So basically, the 401k accounts are a retirement accounts, and the tax qualification of the payments, it depends on certain features and also on how the payments are made. Kind of in simple terms, in case the payments are made on a regular basis, those payments will most likely be qualified as pension income and then taxed at those progressive rates. But in case some structuring can be made on how the payments are made, you can manage to qualify them as investment income and basically tax those payments at a rate ranging between 28% and 11.2. So basically, depends on certain things, but the main idea here is it is possible to apply reduced rates to the payments from the retirement accounts. And by retirement accounts, I say the 401ks, IRAs, Roth IRAs, whatever, instead of putting those payments in the pension income box and tax them at the progressive rates.
Thank you, Pedro. Reggie, we won't have transcripts for these webinars. We don't have this tool yet, but you can certainly have access to the whole video recording. And I guess now we did reach to all of your questions, at least for now. Feel feel free to get in touch with both Pedro and Sarah, and wishing you everybody actually a nice day. And you anything you need, you can come back to us. Thank you, everybody.
Thank you. Take care.
Thank you.